Senior financial leaders are becoming increasingly concerned about speeding up the month-end closing process. 52% of the senior finance professionals believe that they still spend too much time transaction processing. However, following the correct order in the month-end process could save a significant amount of time, allowing you to focus on tasks that add value. So, what is the correct order of tasks you should follow during the month-end closing process? Do you have a checklist in place, or do you wing it and hope for the best? Let's find out. Over the next 5 minutes, we're going to be diving into some pretty interesting topics that'll help you speed up your month-end closing process. First up, we'll be discussing the 8 steps you should follow for an effective financial close. Followed by, we'll discuss the workflow timeline covered in a typical accounting close process. Make sure to stick till the end of this video to access our 10-tip checklist that will help you streamline and improve your month-end close cycle. Let's start with our first topic.
Before we begin, this video is powered by HighRadius, AI-driven autonomous finance solutions for the Office of the CFO to transform your order-to-cash, treasury, and record-to-report functions.
Give it a try.
So here's the typical close process. I've seen it with more information on it, but this is the basics of a close process. And that obviously is the first step is identifying the transactions that need to be in the close and then recording those journal entries. Now, a lot of this, because of delegation of authority and responsibilities, is going to be the accounting side of the transaction, not the AR. However, whoever is supplying in the information is who they're dependent on. And that's where we go back to the dependency topic, and is who am I dependent on to get this information so that I can do this on time. And then closing the ledgers, obviously AR folks usually don't have that responsibility. And once the process is closed, any adjustments to the trial balance have to be reviewed by the auditors, the accountants, and your time is limited, especially if you're on a 4-day close cycle. I've seen most big companies shoot from a 4-day close cycle with a couple of days in there for adjustments. And again, if there is a transactional error because of the mapping of the chart of accounts, those are harder to catch unless you have some artificial intelligence built into your process. It's an eyeball by account review, and that is time consuming. And then of course, once everyone is comfortable with the numbers, and sometimes there are adjustments for various reasons, but I won't get into all of those reasons, but there will be adjustments always. The auditors might say, I don't allow that particular transaction, or I don't think you should put that there. I've heard a number of reasons why they don't do it, but then you got to go back and redo your financial statements again. And then, of course, closing the books once everyone is comfortable. So this is the typical close cycle. You may have more or less steps in your process, than depends on, of course, on the size of your organization and the complexity. But this is the basic close cycle that everyone's going through. The next slide should be the more detailed month-end close processes and who's responsible. Now, I looked at all of these and said, how many of those have I been responsible for? Either supplying the information or actually doing the entries. And in most cases, delegation of authority, especially in the more complex ERP systems, won't allow me to make a journal entry if I'm responsible for the particular area. And that's common across all companies, although they've gotten a little more lax these days because they have a better way of auditing who did the transaction and when. But there's a lot of steps to that. Closing the ledgers, getting the data verified, consolidating the information, especially in global transactions. Those are probably the most difficult because of the time zone, currency issues that might be associated with the close. And of course, the management reporting. Legally, in the United States, the accounting practices are well lined out, but they may not align with a division or subsidiaries' accounting practices. And those have to be taken into consideration for a number of reasons. All of those are listed here. There probably are some more that you may be familiar with in your particular organization. But at the end of the day, it's compliance, it's governance and compliance. They're going to boil down to the true and authorized financial statements. Although I did not cover SOX compliance here, whoever's signing off on these financials, CFO or the Vice President of Finance or whomever, they are liable if there are any misrepresentations, especially fraudulent misrepresentations. So everyone is quite aware of the fact that the compliance is the most important part of the end of the process. So having a checklist and having a number of people look at it so that you're not overlooking any particular item that maybe have consequences down the line. From an accounting perspective, here's again what you're dealing with: the collection of the data, the transaction input, and that's adjusting entries, then closing the GL and then consolidating with other subsidiaries and divisions, and then your internal reporting, which is reviewed by your internal and external reporter, auditors and managers, and then of course the final output is your financial statement. Now, if you're not a publicly traded company, as I stated previously, you still might have creditors that want to see your financials, and a lot of their vendors are requiring financials these days because of the procurement issues that have occurred around COVID, not being able to get the product to the customers on time. So there's a lot of emphasis today, probably more emphasis on logistics and supply chain than there is on creditworthiness, believe it or not. I'm seeing real trend towards the supply chain and less emphasis on credit risk.
We've put together a free checklist with 10 fail-proof strategies for improving your month-end closing cycle. Download it to improve your month-end closing by 100%. Check out the description to get the link to the checklist.
If you're seeking to expand your expertise in credit, collections, and treasury, explore Highako Academy's skill-based certifications program today and climb up your career ladder. Earn a digital skill badge and certificate upon completion of the certification. Check out the link in the description box below for more information.